Morning, ladies and gentlemen. This is Greg Mikulowski from FXCD, and it's Monday, April 12th, 2010, New York opening Forex commentary. Um, the markets overnight were a little bit. We had some movements down lower in the U.S. dollar. There was some revaluation done from Singapore. Singapore revalued its currency, making it stronger. The dollar had a little weakness bias as a result, and we did see things like the euro move higher in earlier trade. We had Intel earnings, which were better. That helped move the stock market higher, and that also helped propel the euro to initial highs for the day. Since that time, we have seen some more negative. There was some talk about that the Greece package may be larger than originally announced by the time it's all done. Also, just recently, there was Greek Moody's was commenting about the Greek rating possibly coming down again in the future. 12 to 18 months is what the headline said. So this has also pressured the euro back down. As far as economic data goes, we did get some industrial production out of the eurozone, which was a little bit better, the eurozone in general. So that was good news. And UK had some nationwide consumer confidence, which came in a little bit better, 81 versus 82 last night. Around the New York close, we did get New Zealand retail sales was much worse than expectations, and so we'll take a look at that currency as well, where we look out from a technical basis. But let's start off with taking a look at the euro versus the U.S. dollar here. We did have the move higher. This is all set up by what I consider to be Three's Company. And in this case, we had the 100 and 200 bar moving average and the 5-minute chart moving sideways here during this period. When that happens, usually the market is ready for some sort of move, and it's set up very nicely by failing at the bottom here, then moving above the 100 and 200 bar moving, having that little correction at this point right here, and then finding the moves to the upside. We had a little consolidation here, got a little bit closer to the 100 bar moving average, and then took off to the top side, reaching a high of 136.65. But then some of the things that I mentioned started to put pressure on the currency pair, and we've seen we've broken back below these key moving averages. We initially held the 200 bar moving average on the downside here, which was a nice hold, and also against a 38.2% retracement. But when the market failed up here on any sort of momentum to the upside on this sharp rebound to the top side, the market gave up and then started to move below our key support levels at the 200 bar moving average. Also at yesterday's highs at 136.25, 26 area, that also helped propel the market to the downside. Now, as we head into the New York session, we're going to be looking for resistance against this area right here, the 136.19 area, at least initially, to see if the bias to the downside can remain for the euro versus U.S. dollar. We had to move to the upside. Now we have like a lower highs and a move to the downside. In fact, we just took out the lows for the day on this last move to the downside, and trading near the lows for the day as we speak at 136.03. So if this level can hold, then we should see the market continue to press down toward the 135.91 level. I put 135.82 kind of as a supportish type area from yesterday. There may be better support down at this level right here, which is comes in at 135.68ish type area. Using these levels as sort of extremes where the market quickly moved below, then came back above. So those would be my targets on the downside. It looks like the euro is heading in that direction from the early New York opening. But watch this level on the top side, 19. Also watch this area up here with the 200 bar moving average in this 136.26 area on the top side. We should not get back through those levels if this bias to the downside is going to continue for the euro versus U.S. dollar. Remember, from the hourly chart, we do still have this gap to fill in this currency pair, which extends down to 134.94. From Friday's close to Monday's opening. Let's take a look at the pound sterling. We'll look at it from an hourly basis here, and to start off with, and we are consolidating here for that currency pair. We did break above this high that we saw here yesterday, but you can see here that the market could not extend up high, and the market quickly failed In fact, we had to move up, and the next move was pretty substantially to the downside. This is a bearish sign for the market, and definitely the market took a note of that and started sell off in that currency pair. Taking a look at this hourly chart, we do have this support against this trend line. The trend line comes in at the 153.81 level. This 80 level was the gap from Friday's close up to the top level. So we did hold it earlier today on the initial move to the downside, and that will be this area will be our target as well for support here today if the market moves through this area right here, as marked by 80 to 90 level. Also these highs here and these highs right here, that would signal that we should be heading to lower levels with a test of the 100-hour moving average. 38.2% retracement of this move up from this low to this high also comes in at 153.53. That would be our target on the downside. Let's transition to another currency pair. We'll take a look at the dollar versus Swiss. There is talk that there may have been some intervention by the Swiss National Bank. I want to look at the daily chart here first, and that intervention maybe against this 100-day moving average. 100-day moving average comes in at 104.95. This is the last time the Swiss National Bank came in and intervened at this level right here. So we're getting closer to this intervention level where the Swiss franc or the central bank did come in. So I'm not surprised about that. We can probably use this level as a floor level for the dollar versus Swiss, 104.85. But you can even though there was intervention, the spike back to the upside is not exactly all that inspiring. Take a look at the chart here. You can see how the market spiked up a little bit, and we are currently trading at the highs as the dollar gets a little bit stronger here off of the Euro news or the Greek news. So this may give the market a little bit of a boost to the upside. 105.65 level was this flourish type area that we saw when the market was consolidating here for most of the time. So we'll look for an extension up to that level. We'll also put in a Fibonacci off of this. Oops, I didn't want to do that. I'll put in a Fibonacci off of this high, most recent high to the low. And we can also target as a 50% retracement somewhere around the 59 to 65 level. So this area right here is going to be our topside resistance for that currency pair. We'll see how the market reacts against that level on the downside. This support area, these lows from yesterday, before we break down and use that as resistance to the top side, will be our levels on the top side. Taking a look at the dollar versus yen, we did see the market continue its move to the upside here today, as the 100-hour moving average was bottoming here. We had this trend line here coming in 1, 2, 3, 4, 5. We broke above it in the Far East session, came down, tested it, moved a little bit below it, and then started to use this line as a support line. And where do we go? We went right up to test what we were looking for, the move toward the 200-hour moving average, toward the 50% retracement at 93.67. Market hit that level 2 times and then came back down to the old 38.2% retracement. Now we're in between those two levels. So needless to say, we're going to be looking for a support of 41. We're going to be looking for resistance against this 60-ish type level where the 200-hour moving averages also have resistance at the 67 level. I mentioned that the New Zealand versus the U.S. dollar had some retail sales data come out yesterday, and this helped move the market initially through the 100-day moving average at 71.10. You can see we're above that at 71.20. I would not fade and move below the 71.10 level again. Go to your hourly chart, put a line in at 71.10. And that also pretty much corresponds with the 100-hour moving average as well. So there's 2 reasons why the New Zealand versus U.S. dollar should hold the 71.10 level. We've tried to move down below it in the London session. If we do it again, I would think that we get a further move to the downside with 70.78 being the next support level for that currency pair in the process. We do have U.S. data today. We have CPI expectations come out plus 0.1, ex-food and energy plus 0.1. We also have advanced retail sales sales supposed to come out plus 1.2, less autos plus 0.5, less autos and gasoline plus 0.6, business inventories come out at 10 plus 0.4 expectations, and Fed's beige book at 2. This is Greg McCloskey for FXDD.